Hello everyone, I'm Steve Rodell, Managing Director of Retail and Leisure at Christie Co, and today I'm delighted to welcome Gordon Balmer, the Executive Director of the Petrol Retailers Association, or the PRA, to discuss the outlook for forecourts in 2025. Thanks ever so much for joining me today, Gordon.
You're welcome, Steve, and nice to be here.
So for the benefit of anyone who doesn't know what the PRA does or doesn't know Gordon Balmer, can you just provide us with a brief introduction?
Well, we're a not-for-profit trade association. We've been around over 100 years, and we represent the interests of our members, which include most of the independently owned forecourts, 3 out of the 4 major supermarkets, and 75% of the motorway service areas. Just to put it into context, that's over half the number of forecourts in the UK and 65% by fuel sales in terms of market share. So a substantial chunk of the industry.
We recently launched our Business Outlook publication, which revealed a very strong demand for petrol filling stations across the country last year, and that is continuing into this. There are consistently more buyers for petrol filling stations than we can get instructions on. Why do you think that is?
Well, I think when you actually look at the where the money is in forecourts, a lot of it is in convenience retail, and there are a lot of entrepreneurs out there that are looking to buy that. I think when you actually look at some of the market information, the market share, or the growth rather, on convenience retail in forecourt settings has actually outperformed convenience stores themselves. So they're very attractive areas to invest in. And of course, you've got the other aspects such as EV charging, car washing, and all the other services as well. So it's not just all about fuel.
And I suppose it being a fairly needs-driven business, it's no surprise that there's been a lot of press around the price of fuels at the pump and on the pole. Alongside dealing with that media, what are the key issues and trends that you're sort of dealing with for members at the moment?
The 3 areas that are really sort of piquing their interest are crime and the unprecedented levels of crime, both shop and fuel theft. The rising costs, obviously we've had the announcement on national insurance and also the national living wage going up. So the cost of employing people has gone up. And the other aspect is obviously government intervention with the current proposals around the fuel finder scheme and the market monitor from the Competition and Markets Authority.
There are some pretty big challenges there, aren't there? And I suppose actually sustainability is now a golden thread through pretty much every business. How do you think the drive towards a more sustainable future and net zero emissions is going to affect the sector over the next few years?
Retailers are obviously playing their part in terms of installing charging points. A forecourt is the safest way of getting a vehicle off the road and back onto the road. Many retailers are investing in facilities such as cafes, so obviously with increased dwell time on forecourts they can obviously provide facilities for people to wait while the vehicles are charged. But we're also doing a lot of work in terms of sustainable fuels such as HVO, or hydro-treated vegetable oil, which can be a drop-in fuel for lorries and trucks that were using diesel. So there's a lot of work going into that. Then obviously you've got things like hydrogen as well. And as far as initiatives that our members are taking in terms of sustainability of their operations, a lot of them are looking at solar panels to try and cut electricity costs. They're looking at monitoring systems in terms of optimising the amount of electricity that they use on site, recycling waste, and a number of other initiatives around really running the business as efficiently as they can.
There's a really interesting mix of things that you've just said there, and one of those is alternative fuels. It seems to me that the take-up of electric vehicles has recently faltered. The number of vehicle sales absolutely seems to have gone down a little bit, but there seems to be an emphasis from consumers on preferring hybrids as opposed to EVs. What is the reason for that, do you think, and how might this have a negative or positive impact on forecourts?
Well, I think there's a lot of issues around range anxiety and the level of charging points, especially around other parts of the country other than the southeast. When you actually look at the network, there are, I think, 70,000 charging points around the UK. But obviously there is a balance, I think, in terms of different regions. So southeast has got a lot, and when you go to places like the northwest or the northeast, it's fairly patchy. So there is an issue around range anxiety. So I think there's the average consumer possibly isn't ready to take the full step to go electric. and a lot of the electric vehicles are being purchased by leasing companies for company cars, for fleets, to take advantage of the tax break. So in terms of advantages for obviously our members, yeah, they can have charging points. A lot of those people who've got hybrids will charge at home, but obviously they will still use primarily petrol, and that's good news obviously for our industry.
And what do you make of the recent news of some of the oil majors are going to rein back their renewable programs and focus on fossil fuels again? Is that something that indicates a change in direction for them?
Well, it's one of these things that oil companies, being PLCs, multinational companies, have got shareholders to answer to. And those companies, especially during the Ukrainian war when energy prices spiked, made a fortune. And some oil companies that pivoted towards this green initiative didn't do as well. And so there's been some announcements that they're concentrating back on the oil and gas industry and leaving renewables to other companies. And one of the problems here is renewables can be quite a long play in terms of investment, in terms of getting your money back. And certainly some of our members, particularly in the independent sector, are still sitting on the fence as far as EVs are concerned, because some of the investment cases, especially when you put in the cost of putting power into a site, can be 8 or 9 years in terms of getting a return on their investment. So, you know, there's a lot of issues there that people have to consider.
So we recently sat on a panel together at the Forecourt Traders Summit, and there was a presentation from a government official talking about the amount of EV charging points around the road network, and he showed us a map that there are some cold spots, he called them.
Yeah.
Do you think it's realistic that every forecourt operator could have an electric charging point on their forecourt?
No, because there are technical issues around the level of power that needs to be delivered, the upgrades to the network in terms from the local electricity company to provide that, local authority planning permission. So there's a lot of hurdles to be overcome. And also the propensity for people to charge on that site. So traffic levels, ownership of EVs in that particular location, whether it's an urban site or a rural site or a transient site. So there's a huge amount of things in the mix in order to determine whether that site has got the propensity to really put charging points in that would make money.
And we know that there are some companies that have invested heavily into EV charging. For those that are lucky enough to be able to do that, or that have got the infrastructure to be able to put chargers on, do they make money?
They will make money, and some of the people that are actually doing it are the larger companies. So the larger independently owned forecourt groups, people that are backed by venture capital, and obviously the major multinational oil companies. They're the people that are doing that at the moment.
So it's not for everyone then?
Not necessarily, no.
A little earlier on in the conversation, you mentioned the fuel finder scheme. Tell us a little bit about that and what that is going to do for retailers, or what will retailers need to do to accommodate it?
Well, the genesis of this scheme came from the Competition and Markets Authority study back in 2022, and that was following the change or structural changes to the market and changes of ownership from some of the major supermarkets. And the government started to notice that fuel margins had been increased when they compared them with an average of the last 10 years. And they sought to understand what the underlying trends were. And then there was a fear that the market wasn't as competitive as it should be. So what the government have done is they proposed two actions from this report. The first is the fuel finder scheme, as you've talked about, and the second one is a market monitor. So the fuel finder scheme requires or will require all forecourts in the UK to put in their price changes on the poll into a centrally controlled database. Now, what's going to happen there is app providers will then skim that data, and so the motorist in real time will be able to actually see what is on the poll at any particular forecourt, and it's as best as they possibly can. What they hope by doing that is people will then be able to shop around for the best deals, and also it should increase competition amongst the forecourt operators.
But do you think consumers are driven wholly by the price that's on the poll? So if they're looking at these apps and the cheapest fuel is over there, it might be 10 miles away. Are they going to go there?
Well, unless you're silly, because obviously you've got to take into account the cost of the dead miles to travel to a site to get a couple of pence per litre off. No, I still believe people are going to be looking for convenient sites, so sites near where they live or where they work or on a transient route, and what the facilities are on site. Because some companies will tell you that 50% of people that visit a forecourt don't come for fuel. They come for food for tonight or food on the go, to get their car washed, to drop a parcel off, to go to the post office. So there's a whole range of services that they utilise, not just to get fuel.
Okay, so just turning back now to some of the operational challenges that you mentioned earlier on. Obviously, the rising amount of crime across retail generally, but particularly in the convenience and forecourt sector, is a big problem and has been well documented. How are retailers dealing with that? Because presumably there's a huge cost there.
So there's two aspects to this. The government are going to make the offence of assaulting a shop worker a criminal offence, punishable by 6 months in prison or an unlimited fine, which is great news because shop workers need the protection of that legislation. The second aspect is the removal of the immunity or seeming immunity of any crimes below £200 in terms of value. So that should hopefully mean that police actually attend some of these incidents. To put it into context, the Retail Business Forum did some studies on the amount of shoplifting, and it costs the retail industry over £2 billion a year, and that's 55,000 incidents of shoplifting per day. So you can imagine, our retailers aren't immune from that. They are getting hit as much as C-stores as well. And in terms of what they're actually doing on the ground, they're putting things in such as facial recognition software. They're also looking at body cams and headsets. And in many cases, unfortunately, they're having to put enhanced security, which means security guards on the door to ensure that what is taken is paid for.
And of course, going back to the sustainability point, and we're focusing on costs here, we've got the minimum energy efficiency standards, so there's got to be more investment into LED lighting, better ventilation and air control, fridges on doors, things like that. I mean, what evidence do you see of retailers putting investment into those areas?
Well, we have a number of roadshows and business breakouts throughout the country, and one of the speakers is from a company that does actually install chiller doors, and that's proving to be very popular. There's a substantial amount of money to actually be saved by putting doors on chiller cabinets. And also the other thing that a lot of people are looking at is software and sensors now to actually determine what the peak times during the day are for electricity usage, and then to start switching things off. So motion sensor switches, turning lights off, and being more careful about the amount of electricity used. So there's a lot of work going into that.
So one of the good things about our industry is that we have a lot of independent retailers that come up with great ideas. And it seems to me that the government seems to want to thwart them at each turn. So there's obviously increase in restrictions and regulation on some of the products such as tobacco, disposable vapes and unhealthy foods which are high in fat and high in sugar. Do you see any evidence of retailers changing what they do to combat those issues?
Yes, I think a lot of retailers are now looking at putting healthier foods in place. So instead of this sort of great big bank of chocolate when you walk out of the forecourt where you go to pay, they're putting energy bars in, protein bars, things that are actually more healthy. And as far as vapes are concerned, obviously you've got the ban on disposable vapes coming up. So a lot of retailers are now trying to sell refillable vapes. So they are actually trying to take action to mitigate some of these things.
Just rewinding to the autumn budget for a moment, there's obviously a huge impact potentially on the level of wages payable in a petrol filling station environment. What are you seeing from your point of view, and what can you do about that?
Well, the forecourt sector employs over 90,000 people. So a lot of those people are close to or just above national minimum wage, and national minimum wage will go up for over 21-year-olds by around nearly 7%. And that is a trend we've seen since 2018. So those costs have to be absorbed, and people have to be paid the appropriate rate for their role. The big impact is the national insurance threshold changes, and that is going to cause a lot of headaches for people. So Unfortunately, quite a number of our members are now looking at freezing recruitment. They're also looking at the manning levels that they actually need, and they're starting to try and automate some of the services. So, for example, self-scanning tills, which will enable their teams to then help customers more and engage with the customers. So there's benefits there. But yeah, there's a lot of challenges going on in that area.
When it comes to buying and selling a business, quite often we come up against capital gains tax and inheritance tax. Is there anything in that subject matter that you can do anything about and lobby government with?
Well, this is another big area. A lot of people, when they saw the changes to inheritance tax, thought it would only affect farmers because they were the ones that are most vocal. They're up and down Whitehall with their tractors and the horns blaring, etc., etc. But it affects all family-run businesses that have got business property, because the business property aspect has been, and the exemption has now been removed. So from April 26, inheritance tax will be levied on business property. So when you actually look at the demographic of the forecourt industry, 64% is independently owned, and a lot of those are family businesses, especially in rural areas that serve local communities. So there's a huge area of risk there. We have lobbied the government, and we've joined together with Family Business UK, a trade association, with a number of other trade associations, to write to the Prime Minister pointing out the issues. But of course, the issues around the forecourt industry are kind of fundamental, because if we can't get fuel to certain areas and fuel deserts open up, then consumers will have to drive further afield, and of course the price will go up. So there's an area of fuel resilience that is a big risk in this area. So this is something we've put a lot of effort into to try and get the government to change their mind.
If we just go back to the beginning of the story and why a lot of people come onto a forecourt and it's to refill their car with petrol or diesel, what's happening to the volumes of fuel that are being sold throughout the UK at the minute? Is it going down? Is it flatlining? Is it going up?
Well, before the pandemic, we had a measurement from the government, and what they do is they take the wet stock readings on a weekly basis. And when you actually looked at the reading that they had before the pandemic struck, which was in March 2020, and then you looked at it afterwards, there was about a 10% reduction. However, since then, when we've actually measured, for example, 2023 versus 2024, it's been relatively stable. We haven't seen much of a reduction. We've seen a decrease in diesel, but that's been matched by an increase in petrol. Yeah. So, and many of the forecourts, or many of our members that I talk to, are saying their volumes are actually doing very well at the moment.
So quite sensibly, fuel is probably flatlining.
Yeah.
So in order to deal with all the costs that we've talked about here, is there any surprise that fuel prices have gone up at all?
Not to me, there isn't, but there is to some members of the government, unfortunately, and it's our job to explain how the economics of a forecourt actually work, and we are doing that. So I have a standing offer of a meeting every 2 months with the Competition and Markets Authority, where I'm meeting with their accountants and economists to actually take them through the complexities of how forecourts actually operate and what they need to take into account when they compile their analysis and produce their reports. Yeah.
So going back to forecourt property, in which case, for us, the sector remains a pretty solid investment opportunity, or so it seems from the amount of buyer activity that we see at the moment. What do you see as important features of tomorrow's forecourt?
Well, I think a lot of investors are looking for larger plots so they can actually develop the land and put different services and on the land. So, for example, we've got some great examples of members that have put in self-service jet washes. Very good money spinner, hugely profitable, with an app that you can actually go into and pre-book when your slot is and pay for it over the app. So some really good examples of that. Obviously EV charging will play a part as well. So again, if you've got a big enough site, you can put EV charging in place. And then other facilities in store, such as obviously a cafe, fresh food on the go. And then you've got obviously the micro businesses, such as parcel collections, post offices. So a range of services around the forecourt, and the forecourt being a hub and being a destination that people actually want to go to in order to get what they need to get, rather than something that's almost like a distressed purchase where they go because they've got to get fuel.
Do you see any part for hydrogen to play in the future? I mean, if we look back at the last 15 years or so, we were probably talking about electric vehicles in the same way perhaps that hydrogen is being talked about today.
Well, we learned at the recent event that we went to, there's only 3 hydrogen refuelling facilities in the UK, certainly on the road. However, some of our members are starting to embrace this, particularly for an HGV setting. However, unfortunately, there's some challenges there because a hydrogen vehicle is substantially more expensive than a diesel-powered vehicle. That's why we're looking at things like HVO. Hydrogen, I think, will play its part, but the technology has got to develop, the costs have got to come down, and then obviously we've got to look at how we actually accommodate that in terms of fuelling on the road.
So going back to our Outlook document, we did survey stakeholders in the wider retail sector as part of that research, and 78% of respondents said that they're looking to either buy or sell over the next year or so. How does this resonate with PRA members? Is it a similar sort of trend that you've seen?
Yeah, it is. So certainly amongst the mid-range, the groups, they're all looking for more sites. And we're seeing people actually, every time we go to an event, do you know anyone that's up for sale? And I'm sure when you come to our events, you get asked obviously exactly the same questions. We are also seeing at the bottom end, of the smaller end, people coming up to retirement now, and their son or their daughter doesn't want to work in a forecourt, and so some of those businesses are now starting to be sold. And now you see some of the more single site operators, more rural site operators, starting to come on the market, and it's that area that I think has got more attrition rate.
So really, I suppose that brings us to the end of our wide-ranging discussion on the petrol filling station market. I just want to say thank you very much indeed, Gordon, for taking time to come and talk to us. It's been a pleasure to go through those matters, and best of luck for 2025.
Thank you very much, Steve.